IMF comments there, ECB, and also Yellen later today. Which are you watching the most closely? What's going to matter to markets most?
Well, both of them clearly, because it's still, as you mentioned, the central bank game. A lot of the rally in equities that we have seen over the last months and years even has been driven by all the liquidity put in by the central bank. So any change to that can have a very big market impact. So a little bit longer term, it will be very important what Draghi does. But of course, he has already done quite a bit in the short run. Will probably QE towards the end of the year, maybe the beginning of next year. Short run is of course Janet Yellen, and I think she will be very careful in her wording. She will probably indicate that the job market has improved, inflation has picked a little bit up, but on the other hand, there is still quite a bit of slack in the economy, and therefore she will be very careful to withdraw the stimulus, because also the US economy and especially world markets are very dependent on the liquidity that the Federal Reserve is providing.
What's your base case for the ECB? Do you think Draghi's going to announce QE, and by when?
Well, it will be a little bit later, because now, let's say after the summer, we will start with the targeted LTROs. That will buy them another couple of months, but all the actions, even though they were quite spectacular, will probably not drive inflation any higher. So you will stick with a very low inflation level, or even a deflation level, as some say. So that's a point, and at some point in time, you will almost be forced to QE, and the markets will start discounting that. And therefore, I still think that equities might be okay, because the Fed will gradually taper a little bit. We start talking about the first rate hike in the United States, but I think that the ECB will make up for the difference, and they will inject liquidity. So I think the market will still be flooded with liquidity.
So Philippe, with all that in mind, what are you saying to investors in the short term? I guess equity is the only game in town, right?
Well, a little bit longer term, they clearly are. We're still very much overweight equities at the moment, even though we know it's very artificial, because it's not really based on a strong world economy, not even based on earnings, but very much based on what central banks are doing. That's not without risk. In the short term, we've taken some money off the table. We're still overweight, but a little bit less overweight than we were, because we see that the market technically is overbought very much at the moment. We go up day after day almost, and without volatility. It's been 31 months since we had a serious correction, so that's historically a very long time. And typically the summer months, and especially September and October, tend to be a little bit more nervous and volatile. So we've taken some of that overweight off. We still have an overweight, but we plan buying some more at the moment that we see a correction of 3 to 5%.